everybody, welcome back to another video. Make sure you guys please do me a favor, please like this video and subscribe to my channel. So today we have our Sunday sector recap. We are going to be recapping the charts and discussing what could possibly happen from here going forward, as well as some macroeconomic data that we have coming out throughout this week. Alright, so into the economic data here, we have an OPEC meeting starting Monday. There's not a ton going on this week in terms of Fed, other than you have Jay Powell speaking on Thursday, as well as initial jobless claims on Thursday. That will be a market moving type event. That's going to be an event you want to pay attention to. Non-manufacturing PMI, that's just going to be something I'm interested in, just to see, kind of get a gauge of where we're at in terms of the economy and in the United States in particular. So other than that, not much. We have a few Fed speakers on Friday as well, but it is a fairly quiet week from the economic side of things. So getting into the charts here, we reached 392, 393. If you remember from last week, that is a level that I thought would be getting touched here soon, and we did get touched, right? So we got all the way down here to 390. I think the low of this candle was somewhere around 390. And we, did everything pretty much to a T textbook, right? Once we hit the trend line, we rejected, pushed, formed a head and shoulders, and boom, we're back down here, 390. So what do we do from here? This is kind of, in the middle of the zone, right? I don't like to trade the middle like that. I like to trade, up here at the 430s. I like to trade, down here at the 360s, 370s. But right now we're right in the middle, right? So for me, it's kind of just, if you're not in anything, it's just kind of a sit and wait time. One thing I do want to note is everyone's talking about the volume, right? Notice these candles, right? Do you see these large sell volume candles that have came in? All this volume is above what we were getting throughout all August. But notice similarly what happened back here, right? You see the volume. Once the volume starts to tick up, you see it start to curve up. What's happening? It's selling off further, right? You're having some risk off sentiment being pushed through the market. So for me, that's kind of what I'm expecting. As you can see, I drew this trend line. We're sitting right on this trend line. So for now, this is going to be support. But if it loses last week's lows, then we could wick lower for sure. However, I would not be surprised to see some back and forth sideways action here, as we had a nice move down from, all the way from 418 on 826 all the way down here to 390. That's a nice move. This is a bear market though, so everything, the bounces and the sells, they come much faster than most people anticipate. The price moves quicker. So moving on, let's look at the QQQ. So we had this bear flag kind of that I drawn out probably 3 weeks ago. Just kind of this, this idea. I guess it would be something more like this. And it looks to be trying to break down. And what you'll see here is that the reject of this trend line had massive volume. So if just like SPY, if you lose last week's lows, you can probably expect some continuation lower into the bottom of this range. Right, somewhere down here, 280 to 270, somewhere in that range. Now, moving on to the sectors. One thing I do want to note, and I think most people don't pay attention to this, but you should. So yeah, we had a nice move off the bottom here. This is the semiconductor ETF, SMH. We had a nice move off the bottom, but so I like to look at things in terms of percent moves, right? This was a 30% rally, 30% counter trend rally. Now pay attention. Now if this was still in a bullish type run, which is not, the long-term trend is down. If this were to be in a bullish trend, you would not want to see it give back over half of that, right? If this pushed 30%, I would expect it to give back maybe 5 to 8%, 9%. And then continue higher or find some footing. But SMH, as well as SPY, this gave back 18%, 17.5% already of the 30%. That is not good. That doesn't happen in bull markets. It does not give back that much. And if we go back to SPY, let's see, markets, SPY, let's see how much SPY gave back. All right, so SPY pushed, let's just go straight from the bottom. SPY pushed 19%, 19.5%. How much has it given back? 19.5%. It's given back nearly 10% of that. Right? You see what I'm saying? If this were to try to, if the sentiment was flipping to bullish and you pushed, well, first you probably would never push 19%, but let's just say you did push 19%, you would only want to see, a 4 to 6% pullback. We're already at 9 here, and it doesn't even look like it's done. So that is cause for concern, right? Because it's already back close to the lows. You want it to hold above the lows, right? You want the bulls to really hold up here. For me, that would have been 405-ish to 410, 412. So that's something to note, and it's something that's caught my eye. Okay, so moving on to XLK, the tech ETF. You can see here we did fail like I thought we would. We failed the trend line, formed a head and shoulders, just like SPY, and failed, and we sold down. This is pretty textbook if you want to put this in an A+ setup folder, meaning a folder where you keep all the perfect charts that you've found, perfect in quotation marks, but see, that was just a pretty clear head and shoulders and a breakdown. So, like I said, similarly to SPY, I expect it to trade sideways a little bit, and then we'll see from there. Moving on to XLY, the head and shoulders again, failing a trendline breakout. And what you'll notice on all of these names is they're approaching these trend lines from the lows. XLC, we had continuation from XLC, that bear flag that I pointed out, and we got our continuation down on nice volume. So new lows do look like they're in store for XLC, communication services sector. So that is something to pay attention to. Real estate is still heading down. It's heading lower. The bounce did not get as high as the real estate bulls would have liked, but with rates rising, to me it's pretty obvious as long as they keep hiking. And remember that the impact of rates is not felt for 6 to 12, 6 to 15 months. So some of these rate hikes that we're getting now within the past 2 months, we're not going to feel the full impact for another few months actually. Moving on to the industrial sector, XLI, actually, out of all of them, holding relatively well. And you do have a lot of manufacturing coming back into the US. You've had a lot of companies say that they're investing manufacturing into the US. So, this is something that longer term, this is going to be a good buy. All right, moving on to materials. Materials rejected on this really key pivot level, right? This area was a key pivot, and we tried to push above it, and we rejected. So now the volume wasn't great on the reject, though, so that's something to note. But the volume's been fairly low in a lot of these sectors, a lot of these ETFs, I'm sorry. Same thing with XLF, rejected the key trend line, or neckline pivot area. Energy is had a nice bounce off the bottom. The inverse head and shoulders did kind of play out. I don't expect it to be done. I think energy can go higher from here, and so energy is one that you probably want to keep a watch on if you only trade the long side, especially coming into the winter months, right? You have Europe trying to figure out this dependence on natural gas. How are they going to heat homes this winter? You have a similar problem throughout many of the European countries. So that is something to watch. Energy, nat gas, coal stocks have gone absolutely berserk. A lot of them are up 2, 3, 4, 500% on the year, 12 months. And that just does go to show you that you have to look at the broader market. You can't just look at a particular, you can, but you're missing out on a lot of opportunities if you're only looking at, tech. You're only looking at Tesla. Well, if that were the case, Tesla's down, whatever, maybe 14, 15% off highs. I'm not exactly sure. Coal stocks are up 2, 3, 4, 500%, right? If you had, expanded what you were watching, you could have made a lot of money on those stocks. All the meanwhile, Tesla's just been chopping you back and forth, chopping everyone up, right? This is the kind of stuff that the best traders are doing. They're not just focused, they do have a couple stocks that they just trade religiously, but they also understand what's going on in the broader market and what stocks are actually leading on the bull side and on the bear side, right? Stocks that don't make any money are leading to the downside, right? Any stocks that aren't profitable, they're selling first. People are getting rid of them, right? Because they're losing money, and so they're going to need to lend, or going to need to tap into credit. Rates are higher. It's going to be costly. So moving on here into, let's look at XLP, the consumer staples. This to me looks like a Head and Shoulders right here. I already have the left shoulder right here, the right shoulder right here. So to me, this is a Head and Shoulders, and it's probably going to try to push back into the bottom of this range somewhere down here. And you did have a big bearish engulfing on large volume, which leads me to believe there will be some continuation before a bounce. Probably continues down something like this, down into this, maybe into here, a little bit lower even maybe, and then probably bounces back up, probably back into it, probably back into the 72s. And last but not least, we have healthcare. This complex Head and Shoulders, it's kind of just trading sideways right now. Again, you had another large volume candle past 2 days here. The weekly chart is just some sideways consolidation really right now, but it did have high volume last week, so that is something to note. So thank you guys for watching this video. Thanks for viewing, subscribing. As always, I will be back with more videos. Peace.